I'm actually calling for a drop to around 70 to 75,000 on Bitcoin within the next sort of 3-ish months. And then a resumption of the bull market, and we hit a high of 250,000 by the end of the year. So I'm actually quite bearish at the moment on the price of Bitcoin in the very short term. I think that the liquidity profile in the United States, China, and Japan has changed versus expectations from late last year, which is why we're going to give up pretty much all of the gains since Trump was elected. That's at least, how I'm trading my particular portfolio and how Maelstrom's treating its portfolio. So, I mean, I read a lot of other people's opinions on things, and a lot of the analysts that I read have been noting that the growth and the pace of liquidity, at least in the United States, has slowed dramatically. We have a debt ceiling, so the United States government, either today or sometime soon, will be unable to add more debt to its debt pile. And there's a question of, from a political standpoint, whether Trump wants to have a fight over the debt ceiling now or try to find ways to prolong when the government shuts down and have that fight later. But sometime between now and the next 9 months, there has to be sort of a fight in the US Congress over to raise the debt ceiling. And obviously, every time this happens, the particular president in power, Biden had to do it in his term. In 2023, has to expend a lot of political energy and capital raising the debt ceiling because obviously lots of politicians like to grandstand and claim that they are about reducing the deficit and not borrowing so much money. And so nobody wants to be the person who approved the government spending more money, at least in the American political context. So I think that's setting the markets up for a situation where the United States is not able to act on a lot of Trump's plans because he's not able to borrow money. And on the other hand, the Federal Reserve is quite antagonistic towards Trump. Former Fed governors have gone on record in various times basically stating that the Fed should be used to prevent him from getting elected. This was a former Fed governor said this in 2018. Jerome Powell has not going to do what Trump wants in terms of lowering interest rates. And I say that all to say that at the end of the day, the Fed has to protect the American financial system. And so if there is some sort of mini financial crisis because of the debt ceiling and worries about the sustainability of the deficit, and some major financial player runs into trouble, then the Fed will have to swing into action, print the money to solve the crisis, and then we get back to business as usual for crypto. So I think in order to get more financial support, more fiat money coming out of the Fed and the Treasury and the U.S. government, they need to have the political cover of a financial crisis. And I think that right now looks like on a probabilistic basis, the time when you could experience something like that. And that's what I sort of argued in about 5,000 words in my particular essay. And if you move on to China, China started September of last year with this whole reflationary exercise. The People's Bank of China was very clear that they were going to buy government bonds. They were going to reduce the price of money. They were going to increase the amount of yuan they're going to create domestically so that the financial conditions could ease, property prices could go up, Chinese people could buy stocks, and those would go up as well. However, the problem with that is that the currency will weaken. And we saw that dollar yuan weakened quite dramatically from September to early January of this year. And for whatever reason, Xi Jinping put the brakes on that. And so starting in the second week of January, the PBOC stopped buying bonds. They reverted to a strong yuan policy, which basically means that they cannot reflate the economy. And as such, credit creation has stopped in China. And so there will not be yuan printed in China in the quantities needed to reflate the Chinese economy, let alone the global fiat situation, until I believe there's some sort of grand bargain or some negotiations between Xi and Trump over what the trade relationship is going to be between the United States and China. So China's not printing any money. And then finally, when you move on to Japan, Ueda-san raised rates 25 basis points to 50 basis points recently. Japanese overnight bond yields have hit 15-year highs, especially in the 10 to 40-year bucket. And the Japanese yen is starting to slowly strengthen. And as everyone knows, Japanese yen is the premier financing currency for financial assets around the world. So if it costs you more money to finance your asset and the currency in which you borrowed is appreciating in value, then you have to sell assets and buy back the yen. So I think the three major drivers of fiat liquidity are all pausing or greatly reducing the pace at which they add it to the global system. And this is at odds with how the crypto markets were believing things would occur. And I thought this as well back in third and fourth quarter of last year in terms of what the liquidity situation would be in the first quarter. So on balance, my internal view is a 60% probability that we go down 30% in a very quick downdraft versus 40% that we continue to make new highs over the next coming weeks. So on balance, Maelstrom has reduced the amount of crypto exposure. We've sold a lot of positions, taken a lot of profit, and we're sitting quite comfortably in a decent amount of US dollars staked in the Athena protocol, earning 10 to 20% yields. And I mean, we're still net long, but we are underinvested in the market given my view on sort of the next 3 to 6 months. I think that the Japanese regulators don't want crypto to be traded in Japan in large quantities, and therefore they reduce the leverage. I'm not an expert on the political situation in Japan, but until that changes, I don't see the leverage changing. And you can make all those sorts of arguments you want, but I guess it's on domestic Japanese investors making their displeasure known to the regulators to change the rules. Otherwise, they're not going to change. I mean, I think that there won't be any big change in sort of actual laws passed in the United States. It's, the process is difficult. It requires a lot of energy. Trump and the Republican Party only have a very small majority in the House of Representatives and the Senate. And so the question is, you have all these different priorities. Which ones do you focus on and produce legislation? I think he's going to talk a big game about crypto. He might make some appointments. They might relax sort of the aggressiveness of the regulatory agencies against crypto companies, but actually putting in place laws that'll last longer than Trump's 4 years in office, I find that probability to be very low. And so I think crypto is going to be very disappointed unless they become a little bit more politically active and savvy and not so naive to believe politicians when they tell them that they're going to do this or that, actually demand it and make sure that it happens. Only if the crypto holders become politically active. Otherwise, the banks and everyone else in TradFi is very politically active. And so unless the young people actually want to see crypto treated differently, then it's going to get deprioritized like it always has. So I think it's up to individual voters in their particular countries to become active. Otherwise, you're going to get the same sort of legislation favoring the same sort of incumbent industries as that's what's been happening over the last 30 or 40 years. We shouldn't care whether they're involved or they're not, right? We don't need them. If this is really about a global monetary system for ordinary people, individuals can make their own choices. If individuals are willing to become actual adults and make their own decisions and do their own research, and they have the tools where they don't have to use a financial intermediary, then don't use them. I mean, yes, if BlackRock and these global players offer a compelling product that makes sense, of course, you should use that product. But the whole point of this architecture is you don't actually have to. You don't have to invest in save your money. Prior to blockchain, there was only one option. There was TradFi. You had to use their products. Now we have a completely different system. We have interest-bearing products. We have, trading products. We have insurance products. Of course, some of them are in their infancy, but we're building all these different products with no financial intermediary from the ground up in a different way that makes sense for digitally first individuals and companies and possibly AI agents. And so we're going to have these products, and you're going to have the products at BlackRock and Fidelity and those types of offer. So I don't see there's a problem with it. Just don't use the products if you don't like them. I mean, I think a lot of the functions of a bank and intermediary can be performed perfectly by an AI, and as they get smarter and more adaptable, that'll happen. And so, the days of a salesperson or a trader or middle office, like all those jobs are going to go. Accountants, lawyers reading random things, compliance officers, all that's going to go. So there's going to be a lot of human resource issues at large financial institutions. You have all these employees, what do you do with them? With AI, at first they'll resist it, and then you'll have, young people, 3 or 4 peer person with amazing AIs completely disrupting the financial services sector until the banks decide that they're going to fire 75% of their staff to replace them with an AI. So I think there's a human resource issue. And then what will finance look like, with, random AI agents running around doing trades? Who knows? It'll be really interesting. And I think that because artificial intelligence was trained in a digital manner on a computer system, and it's a silicon-based life form, that they're going to use a monetary system that is based on computers, logic, code versus, human laws and imperfect sort of beliefs and systems that we have for the traditional financial sector. So I think AI will use crypto. Maybe they'll create their own crypto, but I think AI and traditional TradFi are incompatible. I think meme coins allow us to trade human attention in a way that's very easy for most people to understand. All you need to understand about the Trump coin was, do you like Donald Trump, or do you think more people will like Donald Trump in the future? And that's all you have to understand. Don't have to know finance, don't have to know math. It's just purely, as a socially connected human, what do you think about this person and their popularity in the future? Anyone can trade that. And now we have an ability for anyone to launch their own meme coin to capitalize on the attention in a way that's not connected to any real world financial impact, right? There's no cash flows or anything you have to know to trade a meme coin, which is why they're going to become more and more popular. And Trump started the trend. I think every politician is going to have their own meme coin in the next 5 to 10 years. And you're going to see celebrities sort of find another revenue stream of capitalizing on what it is to be a celebrity. Instead of, endorsing a sneaker, launch a meme coin and, interact with their community and make money that way. So it's a different revenue stream, a different way to sort of financialize attention. And that's why I think meme coins are here to stay. My message is, if you don't like the way things are being run in your country, get politically active. So it's not incumbent upon those in charge to make your life easier. You have to do it for yourself.
ぜひチャンネル登録とグッドボタンを良ければ押していただいて、今後もご視聴いただければと思います。
よろしくお願いいたします。